1. Okay, let's begin the webinar now. Hello, everyone. We're going to start in a bit, so let's give a few seconds to let all the participants in. So how are you guys? If you guys can hear my voice clearly, please type yes in the chat box. All right, thank you for the prompt response from May, Chan Sai P, and also Masterina, and also Lai Quantum. All right, let's begin the webinar now. So hi everyone, my name is Shaz, and I'm the moderator for this session. So today webinar the title is Navigating the Inflation Bubble, which is in the consumer sector. So this webinar is brought to you by Bursa Malaysia and in collaborations with RHB Investment Bank. All right. So before we begin the webinar, let me share you one of the contests that you can join for all the ladies out there. If you want to win 800 ringgit, it's very easy. What you need to do is that you need to, record a 1-minute video, and then you need to share what inspired you to invest. And then you need to upload your video on your YouTube and then send the YouTube link to Bursa Malaysia. Engage at bursamktplc.com before 6 January 2023. So your video will be published on Bursa Marketplace website, and the top 5 video with the most like will each receive 800 ringgit. So that's so easy. Then you can win 800 ringgit. You just need to gather a lot of likes, and then you can win 800 ringgit. So for more details, you can visit Bursa Marketplace website to understand what's the terms and condition for this contest. All right, a disclaimer, whatever we share in this webinar, the information does not consist of legal, financial, trading, or investment advice. And we also will not make any recommendations or endorsement regarding any or product mentioned. So you need to seek the independent advice or consult the relevant law regulations and rules prior to relying on or taking any action based on the information presented. So Bursa Malaysia Berhad and also the presenter do not accept any liability for the information provided during the presentations and in the presentation slide, and for any investment or trading decision made on the basis of this information. So let me share you a few background of our speaker today. We have Miss Raja Nur Akila Raja Ali. She's a equity research analyst from RHB Research or RHB Investment Bank. So Miss Raja Nur Akila, she has around 4 years of experience in the sales side of the investment banking industry, with the coverage of spanning multiple sectors of Bursa Malaysia, notably consumer, property or REITs, transport and logistics sector. So Rajinur Akila also recently won the Age Best Call Awards 2020, and also Best Call Award alongside RHB Research Real Estate sector head Long Kok Weng for their timely call on the CapitaLand Malaysia Mail Trust during the unprecedented market condition of COVID-19 pandemic. So hi, Miss Raja.
Hi.
How are you?
I'm good, thank you. How are
Have you
you?
taken your lunch?
I haven't, but it's okay. For this, I'm willing to wait.
Wow, see the sacrifices of our speaker made today. So, Ms. Raja, I will pass the floor back to you.
All right, thank you so much. I'll now share my screen. I apologize if anything bad happens, but let's just try anyway. Can you see my screen?
Yep, can.
Okay, you can. All right, great. So good afternoon, everyone. Thank you for dialing in to this session. And I suppose I just want to take a moment to also thank Bursa as well for arranging this session. I understand that this is a session that's meant for women empowerment, to encourage the participation of women to invest. So I'm expecting the floor to comprise of the likes of housewives, female students that are just about to start on their investment journey, retired women. Yeah, I'm so glad that this initiative exists because I'm a strong believer that women should have and grow their own capital. So, I'll just reiterate what Shaz was saying just now. Short introduction about me. I'm Akila. I've been with RHB for 4 years. This is my first job. I joined as a research associate and then I became an analyst. So over my 3 years of writing experience, I've covered REITs, and this is where I got that award. But this was for our sell call on CMMT at the time. I've also covered a bit of property, a bit of consumer, focusing on consumer discretionary specifically. And I currently also cover transport and logistics. So I'm one of 4 women analysts at RHB. The rest are super senior, Fiona, Liling, and Kok Wen, who have each 15 years of experience in the industry. So I'm honored to be given this opportunity. So like I said, given the target audience today, this session will be kind of a consumer 101 basics, things we take into consideration when looking at the consumer sector, introduction to the sector, and hopefully by the end of it, you'll have a more informed view of what to have cognizance of should you decide to invest in consumer stocks. Just some disclaimers on our end as well. I hope you can see that my screen is moving, right? Yeah, so I'll just be going through the introduction for the sector, just introduction for the different segments, the 2 segments, some sector outlook, and this is where we'll be touching on our views when it comes to inflation. And then we'll talk about some valuations and maybe some stock recommendations as well at the end of it to wrap things up. So when we talk about the consumer sector, right now, we by and large just split it up into 2, consumer staples and consumer discretionary. So when it comes to consumer staples and discretionary, what sets them apart is how they react in the face of economic volatility, right? So for consumer staples, these are non-cyclical and they're defensive, and they're more resilient in the event of an economic downturn. So in other words, despite the good economy or bad economy, the demand for these consumer goods will remain. So, I've got pictures of Milo here and also eggs and things like that. So these things are goods that will remain in demand despite difficult times, right? Beer as well and coffee. So some of the names that we cover or that we look at when it comes to consumer staples are the likes of the F&B products. So these are Nestle, under which are those products, Milo, Nescafe and such. QL Resources, if you know, they do eggs, and then they also do like seafood kind of products and these are the products that you buy at Family Mart, like the Odeng and such. And then also Powerroot, poultry products, so this would be Leong Hub. Household and personal products, NTPM, so these are your toilet rolls. Sin stocks, so tobacco and brewery. So these things remain in demand despite an economic downturn. And on the flip side, then we have consumer discretionary, and this is what I look at for the most part. Oh, by the way, I cover consumer sector alongside the regional sector head, Wei Xiang, because I'm a woman, so I'm doing this. Consumer discretionary, would be, this is what I focus on. Consumer discretionary would be those that are more cyclical in nature and they're more susceptible to being impacted by economic volatility. And the best example that I can share with you would be what we saw the past 2 years, especially in 2020, right, at the peak of the pandemic. These are the names that were badly impacted, right? I mean, by definition, discretionary products are products that you tend to buy when you have excess cash, right? So when you don't spend on it. So the things that we look at under our coverage when it comes to consumer discretionary would be shopping mall operators like Aeon, convenience stores, MyNews, and also 7-Eleven, restaurants, Berjaya Food. But Berjaya Food is a bit of a unique case, which I can probably get into that later if we have time, and other retailers such as Mr. DIY and Padini. So if you actually got around to looking at their financials for 2020, 2021, you would have seen that a lot of them were actually loss-making as an impact of the lockdown and the ensuing economic downturn that we saw in 2020 and 2021. 2021 was, it was also a bad year for consumer discretionary. And when it comes to the drivers for the sector, we do look at a few points. Broadly speaking, we look at, firstly, the sustainable and broad-based economic growth for the sector. For 2023, we are looking at a GDP growth forecast of 4.3%, but this is primarily due to a slowdown in consumer electronic within that space, consumer electronic, impacting the semiconductor sector. So very macro kind of view when it comes to sector driver. And then the second point that we look at, and this is something that we touch on quite substantially in our research reports, this would be consumer sentiment. Consumer sentiment, I suppose, in other words, is spending power that you see amongst the consumers like you and me, what our confidence is when it comes to spending, right? So these would be driven primarily by the wages. But since May, we've been seeing that the new minimum wage has taken effect, which is the 1,500 ringgit minimum wage. And then also, I didn't put this here, but when CPO does very well, we have our rural kind of consumers having a good time, because with CPO prices doing very well, then we've got the Orang Kampung also seeing or enjoying better wages. So that's what we believe to sort of underpin consumer sentiment as well. And then another angle to consumer sentiment would be unemployment. If it's low unemployment, that means a lot of people would have more spending power, right? So we're expected for unemployment rates to be at 3.5% in 2023, as opposed to 3.8% in 2022. And even at 3.8%, that's already a downward trend. So these things together solidify what is consumer sentiment. So if these things are promising, then we would believe that consumer sentiment then would be positive. Another point that we look at when it comes to a sector driver would be outlet expansions, and this is particularly true for retailers, the likes of Aeon, the likes of Padini, MyNews, 7-Eleven. So whenever these companies tell us that they are embarking on their expansion drive, so for example, 7-Eleven and MyNews, they tend to target to open 100 new stores a year. So that signals that it's a positive kind of environment for the consumer sector. And different consumer names, different consumer retailer names would have different degrees of expansion drives. We've got Padini that is a lot more conservative when it comes to their expansion. So I think they're targeting about 5 to 10 stores a year, compared to the convenience stores guys, which are targeting to open about 50 to 100 a year. Another sector driver then would be strategic M&A, joint ventures in the face of a market consolidation. So we like the names like Berjaya Food. If you've been reading the news a little bit about Berjaya Food, you know that they have that joint venture with Paris Baguette being that South Korean bakery, right? So they're adding that to their portfolio, which is a good kind of booster for the Berjaya Food brand. And if you didn't know, Berjaya Food is the parent company that also holds primarily Starbucks. So if you're buying from Starbucks, you're buying from Berjaya Food. And then also under Berjaya Food is Kenny Rogers. So with the addition of the joint venture that is Paris Baguette, that is indicative to us that it's it's a favorable sort of point to take into consideration for names within the sector. Brand building initiatives as well. So whenever these companies are a bit more gung-ho for building their brand, we take that as a positive point for the sector and where they're headed. Okay, so sector outlook. One of the things that we look, because earlier on I was saying consumer sentiment, right? So one of the indicators that we look at would be the consumer sentiment index. This is basically an index that's born out of a bunch of surveys that have been thrown out to over 1,000 households. 1,000 households in Peninsular Malaysia. So what happens in those surveys is they ask these households what's their income level, their economic conditions, what their views are on their expenses, their expectations on financial positions, employment outlook, and what their views are on inflation, right? So this basically shows your consumer sentiment and to give more color, you can see those very, very deep hits. See, that one would obviously be during the peak of the pandemic. So this was in March 2020. Sentiment was really, really bad. We were going into lockdown. COVID was just starting, right? So things were very uncertain. People were very scared. So since then, sentiments rebounded from March 2020. And also the other pit is during June 2021. So sentiments rebounded respectively from those two troughs. Consumers showed signs of settling. There was a launch of national vaccination at the time to appease some worries amongst customers. So that goes in line with the recovery in both global and domestic economies. And in between, there were temporary dips. I think we all remember like how unprecedented the situation was within the past 2 years. In terms of lockdowns, like how long lockdowns are going to be extended by, what's going to be open, what's going to be closed, who's going to lose their job, who's going to keep their job. So there were temporary dips in between. So there were pandemic resurgences, new impositions of MCO. So these dampened sentiments in between. But the rebound that we saw since the third quarter of 2021 and first quarter 22, which those signal very strong confidence. A broad-based economic recovery post-pandemic should lead to job and income creation, and this should buoy consumer sentiment after a very, very long, drawn-out period of the pandemic, which I believe has tired out everybody, and everybody at one point was just waiting to go back out there. In September 2022 onwards, now beyond this COVID kind of picture, there's this slowdown in global economic growth that we're looking at. Absence of spending boosters as well that I can touch on later, and prolonged inflation, which collectively now dampen sentiment a little bit. This chart is a little bit outdated. I think we've got a September number, but I didn't get to update it because we just came out of result season last week, so I didn't have time to really update it too much, this slide. But yeah, this gives you a general idea of what the sentiments of consumers in Peninsular Malaysia looks like. So that was more numbers-backed, data-driven. This is more anecdotal. And for my job, we do a lot of ground checks. To just get a feel of what consumer sentiment on the ground is like. I think you also have seen when you go out and about, footfall at major shopping malls have returned to pre-pandemic levels. There's a very noticeable pickup in consumer spending in comparison to the time when we were in lockdown, when all the malls were quiet. In the second quarter of this year, earnings performance was actually really good. And this was attributed by Retail Group Malaysia, RGM, to the Hari Raya festivities. This was the first Hari Raya that we had in 2 years. Before that, we were in lockdown, right? Relaxation of movement restrictions. And also just coming from a low base because we saw a lot of forced closures, right? In 2021 and 2020. And then RGM, they said in their report that the Malaysia retail industry jumped 96% year-on-year for the third quarter. So this was quarter ending September. Yeah, this, like I said, is mainly due to the low base effect in comparison to the slow numbers that we saw last year. Obviously, the numbers that we see for third quarter this year will be very good. And going forward for the fourth quarter, now what is the expectation, right? So RGM said that they're expecting an average growth rate of 13.9% for the fourth quarter of 2022. Yeah, so I think there's a lot of question here about where the direction is now, because we've been seeing things very slow in 2020, 2021, and things picking up in 2022, but attributed to base effect. So going into 2023, what then is the trajectory, right? But it said that retailers in Malaysia are hopeful that the industry will continue to recover at the end of this year, primarily due to Christmas celebrations and New Year. Now, if you don't know, when it comes to these consumer stocks or consumer companies, they tend to be very seasonal in their performance. So those quarters where there are celebrations and festivities and all that, and like school holidays, those quarters tend to do very well. So we're looking forward to the fourth quarter going into the first quarter because of Christmas and Chinese New Year. These really just also illustrate why consumer sentiment was strong in 2021, or like why consumer sentiment, or what was happening in 2021 to lend support to consumer spending, right? So on the back of pandemic challenges, there was a lot of relief packages that was given out to support consumption and also employment. There were cash handouts, the Bantuan Prihatin Rakyat, Bantuan Khas COVID-19, Bantuan Keluarga Malaysia. I will not read all of that out, but basically these are all things that lend support to consumer spending. And also on top of that, the various job retention schemes, so wage subsidies, financing facilities, tax incentives. So these all lend support to consumer spending in 2021, because it was really, really bad, right? Coming into 2021 from 2020, and things were so uncertain at the time. So this is basically a report that we had issued, a regional thematic report that we had issued back in September, it was a report on inflation in the region, navigating the inflation bubble, where we basically talk about the angles that we were looking at to assess which stocks would be beneficiaries in an inflationary environment and which stocks would be losers, right? So we believe that investors then should focus on and value companies with strong pricing power, right? Like I said, we basically name companies which we think have strong pricing power and which don't. In essence, we believe that the elasticity of product demand, market share, and also levels of regulation are the key factors in determining price power. So inflationary pressures, I think that was a bit of our economist. I mean, his views keep changing and it keeps getting updated, right? But if I recall correctly, the peak of inflation is, what do you mean by strong pricing power? Okay, we're going to get into that. So inflation was going to be in the peak in the third quarter of 2022. When you look at strong pricing power, we will look at three factors for the most part, right? The elasticity of product demand, the market share that the company has, and also industry regulation. Now, an inflationary environment compels consumers to prioritize essential items, right? And daily necessities such as staple foods, and they would cut down on discretionary spending. So consumer staples are relatively less affected by inflation, as they are in a better position to pass on higher costs given the inelastic demand for F&B products. On top of that, we think that beer and cigarettes enjoy relatively resilient demand thanks to the addictive nature of these products. And I guess when you want to talk about elasticity of product demand, luxury goods also, I think, tend to enjoy more resilient demand as they tend to be enjoyed by high income customers, right, who would for the most part be unaffected by the rise in prices. So the higher cost of living also pushes consumers to downtrade and seek for value for money substitutes. So this would benefit the companies that offer such value propositions. So if I were to mention some names, the companies that have companies that demonstrate this value would be the likes of staple foods manufacturers. So these would be your Nestle's, your QL Resources, Farm Fresh, and Power Root. So they will be in a good position to pass on higher costs, right? So strong pricing power there. In fact, all of them have actually implemented price increases since the start of this year, On the other hand, we also have the brewers that have seen an encouraging recovery in consumption. They have been undeterred by the introduction of price increases. BAT, the only listed tobacco player, is also seeing stable volumes, notwithstanding the huge price gap between legal and illicit cigarettes on the back of rising inflationary pressures. And then on the flip side, then we think that consumer discretionary names, including Aeon and Padini, as well as the convenience store operators, they should see lower footfalls if the inflationary situation worsens or is prolonged. And then the second, so that was elasticity of product demand when it comes to pricing power. And then also another angle when it comes to pricing power, like companies that have a big market share would have strong pricing power. And what we mean by that is that industry players with a more dominant market share should be able to withstand these pressures, these pricing pressures, because players with a more dominant market share will have stronger pricing power, because any rise in costs will result in heavier pressure on industry players with a smaller scale of operations, right? Taking into consideration the economies of scale. So apart from raising prices, these market leaders, the ones with bigger market share, also have the flexibility to maintain their ASPs, to consolidate or gain market share. So if we were to talk about examples within the industry, notable players with sizable market shares in their respective industries would include Mr. DIY in the home improvement market, right? Or the brewery duo Heineken and Carlsberg in the duopoly legal beer market. I think Mr. DIY has 38.5% market share as of the end of last year. And then BAT, right, with 51% of the legal market share as of May. And NTPM, the toilet roll company, with over 50% share in the local tissue paper market. And then also Farm Fresh with a 49% share in the chilled ready-to-drink or ready-to-drink milk market as of March. Right, so this is to further illustrate our point. Except for BAT, all of the companies that I mentioned just now have raised their ASPs to pass on higher costs. I note that Mr. DIY embarked on a price lock campaign in the first quarter before the price adjustments in the second quarter. So this helps them to strengthen their market share and consequently led to a 20% year-on-year jump in their on their revenue in the first half of the year. And then when it comes to pricing power, that also has to do with industry regulation or government intervention. Certain businesses or industries are subjected to strict regulations when it comes to pricing. So this usually happens when the government or authority sees the need to balance the supply-demand dynamics of the particular industry to protect the interests of the lower income group. So earlier on in the year, the government imposed a ceiling price regulation. Early on the year. Okay, but basically the government imposed a ceiling price regulation that is still in effect now to curb rising inflation. Poultry players under our coverage, including Leong Hap and QL Resources, were affected by the ruling, and they lost the flexibility to adjust their ASPs accordingly against the hikes in costs. Right. On the other hand, we have the local tobacco and beer industries that are subjected to among the highest excise duties in the world, and these are built into the selling price. So this has resulted in a wide price gap between legal and contraband products, leading to the high incidence of illicit trade that we've been seeing in both industries. So things are particularly worse for the legal tobacco industry, which is also subjected to a minimum price of 12 ringgit per pack. Right. On top of that, daily necessities, including sugar, flour, and cooking oil, are also subject to regulated pricing set by the government. So, different companies are impacted differently depending on what their dynamics are across these three factors, right? Elasticity of product demand, market share that they have within their respective industries, and also industry regulation. So all of those collectively would determine their pricing power. So low unemployment to underpin consumer spending. Like we've said, consumer sentiment then would hinge a lot on employment levels. And also just spending power also depends on the minimum wage that we have, 1,500 since May. That was a good good plus point for the sector, and that has resulted in higher take-home pay, which suggests that purchasing power can be expected to remain robust in the second half of the year. Like I've said earlier, I think the unemployment level should be forecasted to go even lower going into 2023. So if anything, consumer sentiment should be supported by that. Sorry. So according to the Department of Statistics Malaysia, DOSM, it is expected to dip. The unemployment rate has dipped below 4% since the tough times of 2020, and higher labor force participation has some positive correlation with the pickup in manufacturing activities. So if you see this chart on the right, we've been seeing that the manufacturing activities have actually picked up, and in line with that, unemployment has also seen a pickup. So we're quite positive on the prospects of low unemployment and how that would then trickle on into the consumer sector. Okay, this slide is a little bit null, I guess, because budget, it was scrapped. We've got a new government now, but let's just talk about the things that were highlighted in the budget that was announced in October. Right, to assist the B40 segment, they proposed things like cash assistance under Bantuan Keluarga Malaysia. So that was expected to benefit like millions of recipients by an allocation of 7.8 billion ringgit. Right, they also proposed to allocate more than 55 billion ringgit in subsidies, assistance and incentives to alleviate the pressure from the high cost of living. So this would have been very positive for the sector in spurring consumer sentiment. When it comes to the higher income groups, they should be able to benefit from the proposal of the lower personal income tax rates, which translate to tax savings of up to 1,000 ringgit for the middle income group and 250 ringgit for the highest income group. And on top of that, the M40 segment will also receive e-wallet credits, right? So B40 and also higher income groups, those seem to have positive prospects when it comes to consumer spending. The government plans to increase the allocation for school milk. So this would have been a benefit for Farm Fresh, which is a major milk supplier in Malaysia. And they've been supplying milk to school since earlier this year. So basically the first 2 points here point to the fact that if the retabled budget were to touch on such measures similar to this, then we can expect for the consumer sector to be supported in 2023. And then the government, in what was announced in October, the government also said they aim to enhance and uplift its efforts to clamp down on illicit trades in tobacco and breweries. So this, together with effective execution, leads us to believe that such initiatives should result in higher market shares for the players in the legal markets, which is a positive. But like I said, this is, this budget was scrapped. So let's see what the retabled budget should have to say, but we're expecting for things, it's usual like for every year they would talk about cash handouts to support consumer sentiment, so we're looking forward to that now. When it comes to sector outlook, right, it's a question that I posted earlier on in this presentation. 2020 was bad, 2021 was us trying to do better, right, given the circumstances, and also things turning slightly positive with the rollout of the vaccine and people getting vaccinated. And then 2022, things actually opened up and we're transitioning to endemicity. Things are opening up. So numbers have been very, very good coming from a low base. So based on results that we were seeing from these consumer companies, it was robust on a year-on-year basis, of course, coming from a low base. But moving forward, what can we expect, right? So third quarter, good results on a year-on-year basis. Obviously, it's a little bit flattish on a Q-on-Q basis compared to the second quarter. Because on a Q-on-Q basis, because second quarter was an exceptionally strong one because of Hari Raya, because everybody was just so impatient to go out because of the lockdown and like the uncertainties were going on for so long. Right, so Q-on-Q was a little bit flattish, but numbers still indicated a solid recovery on a year-on-year basis, right? If you were to compare it to the pre-pandemic levels too. So what then lies ahead in FY23, right? So we anticipate a more challenging year, considering all these different factors. Firstly, we've got the potential slowdown in global economic growth, like the trickle-down effects into the country then would be a concern to us. And then the absence of spending boosters, including EPF withdrawals, loan moratoriums, and high commodity prices that spurred rural spending. Yeah, so like I said earlier on in yeah, so can you imagine in 2021, these were all the things that were given out, all the ETF withdrawals, all the cash handouts, right? So in 2023, we're not going to have that. So then there are concerns about what then would be underpinning consumer sentiment in 2023 if those things are not in place. Yeah, and then also potentially prolonged inflationary pressures. Granted, economists have been saying that the peak of the inflation will be in the third quarter or so, in maybe a little bit in the fourth quarter, but there are real concerns about inflationary pressures persisting nonetheless. So that's something we also take cognizance of. And also the high earnings base. I've been saying base effect, I think 5 times at this point. So that's something that's very worth noting. I think a lot of the strong consumer sentiment that we've been seeing this year is due to the fact that in 2021, it was very subdued. So going into 2023, how then would the numbers compare? So we do anticipate a challenging year in FY23. So overall for RHB, we have a neutral call on the sector overall. This is more on a valuation basis. I think when it comes to valuations, the larger cap staple names have lofty valuations, so fairly valued. So coming back to the what we've been saying in this session so far, we prefer companies with stronger pricing power to withstand any further escalation in inflationary pressure. We also recommend that investors consider players with sustainable growth prospects beyond the post-pandemic earnings normalization and pent-up demand. So basically, aside from reopening play, where they then will benefit from a pickup in foot traffic, a return in shoppers and all that, like what else do they have in store, right? So top picks that we have for the sector would be Mr. DIY, Powerroot, Heineken, and Guanchong, but these are things that we talk about in our reports. This is not investment advice, as Chaz pointed out. Okay, and then this is a quarterly sector revenue chart that I think nicely illustrates the point that things have returned even like better than pre-pandemic levels as far as revenue goes. The worst then would be the June 20 quarter, badly impacted by the pandemic, and then ever since then it's been on a steady kind of upward trend. Yeah, to show that consumer sentiment has been quite strong. On a Q-on-Q basis, as you can see, June to September, it's flattish Q-on-Q, but on a year-on-year basis, it's doing very, very well. So the question that remains, what happens in FY23? Valuations. This is something that I would present to my institutional clients, basically, because we talk about valuations a lot. Right? So in-house, we use a lot of discounted cash flow for our valuations of these stocks that we look at. Me personally, I look at consumer retail, right? So the likes of Aeon and Berjaya Food and MyNews and 7-Eleven. We use DCF considering the stable operating cash flow trends for these companies. And on top of that is the fact that with these consumer retail names, a lot of them go for expansion drives, right? So they go for expansion drives. So it's good to have discounted cash flow, which is across 10 years, to capture the cash flow coming in from these new stores that they intend to open up. So it's more accurate to capture those cash flows. Yeah, we use DCF to value most of the consumer stocks under our coverage for consistency. And we use in-house assumptions for our cost of capital. So risk-free rate, we use 4% in line with the 10-year bond. And then market risk premium, we use 7.74%, but this is doesn't really matter lah to our audience, I think. But alternative valuation methods that we use, we have SOP and also dividend discount model for the breweries. This is something to take note of. This is the Bursa Malaysia Consumer Product Index for benchmarking purposes. I don't know how many of us here attended the session previously by Eltrisha, where she was talking about benchmarking and all that. But for the consumer index, you can choose to benchmark your valuations against this. Personally, for me, it's good to take note of this. It's like it's trading 16 times, and then the average is about 18 times. But I don't look at this so much because of the fact that when it comes to this index, it comprises 162 constituents, right? So all consumer names are so different from each other. We've got MyNews that is like comparable at best to 7-Eleven, right? But then they're so different from Padini, which Padini, they sell clothes, right? And Padini is so different from Nestle, which sells like food products and drinks, right? And then they're so different from QL and Yonghap. So it's not a like-for-like comparison, and it's unfair to lump them all together to make up this index. Yeah, because so if you didn't know, it makes up of 162 members, and then within this index also are the auto names. And if you also didn't know, auto companies also count as discretionary because you only buy cars when you have extra cash, right? But yeah, within this index, we've got the auto players like Burma's Auto, DRB Highcom, right? And then we've also got the gaming guys in this as part of this index, so Genting. So this makes this, I would take this index with a grain of salt and not use it as a direct benchmark to any consumer name that you're looking at. Okay, stock recommendations. Okay, I should have changed that. So I wouldn't consider this stock recommendations. This is not investment advice. But these are the names that we have in our coverage universe. Yeah, and the valuations that we have. But just so these are the names that we cover. Again, this is not investment advice, so I removed my calls from these two sites. But talking about these stocks could give you an example of how the things mentioned earlier on tie together. Maybe I can talk about, I think I have time to talk about maybe a few of the names that I personally like. So like I've said earlier, I cover consumer discretionary. So within this space, I look at, my preferred picks are usually Berjaya Food. Berjaya Food, if you saw, they rallied quite a fair bit in terms of their share price. And this is due to the fact that, I said earlier on, this is considered a consumer. Okay, what is your view on Padini? And okay, I don't cover B Auto, but let me talk about Berjaya Food first lah. Okay, talk about Berjaya Food first. I like Berjaya Food because they belong under the consumer discretionary space, right? So you would think that people spend more on Starbucks if they have extra money, right? But it turns out that even during lockdown, despite the difficult times that we've been seeing, people still spend on Starbucks. It's almost like it's like a necessity still, or it's almost like it's like one of those luxury things that people tend to still splurge on despite having like some like financial difficulties, because it makes people feel good. If you don't know about I think it's called the lipstick effect, where people tend to splurge on little luxuries to feel good. I think that applies to Berjaya Food as well. So we like Berjaya Food because, on top of them being a recovery play, they also are they also have been very resilient despite the lockdown. So they've been able to really leverage on their alternative sales channels. So while everybody else was closed, they cannot open during lockdown, they use their delivery options, right? Really leveraging on like the food aggregators, Foodpanda, Grab, and all that. And one thing about them is that they've really embarked on one of their strategies, which is to focus more on drive-through store format. So if you see Starbucks, quite a few drive-through stores have emerged of late. So that's a very conscious decision that they made to grow their business. So that's Starbucks. And the thing about Berjaya Food is that a lot of concern surrounding them was due to the fact that Kenny Rogers was loss-making. So good news, Kenny Rogers is now profitable. They've been closing all their underperforming stores. So moving forward, they hope to maintain their good performance. Yeah, so that's Berjaya Food. Berjaya Food CFO is a woman, by the way. Her name's Louise. Anyway, so somebody was asking about Padini. Not investment advice, but we recently upgraded Padini to a buy because we just thought that things are looking up for them, because in the face of an inflationary environment, when spending powers are slightly more subdued, you would think that people would then be more selective of what they spend on, right? So instead of spending on high luxury items, they then would spend on things that are more value for money. And what's more value for money than what Padini has to offer, right? So that's why we like Padini, because of their strong brand. Excuse me. That's what we like about Padini, because they have this strong branding for value for money kind of products, still high quality. I don't think I've ever come across anybody who's complained about Padini's products, except for the fact that they shrink upon a few washes, but for the most part, it's still good quality products. Right now, we also like Padini because they've been able to sort of withstand pressures within the past 2 years. Obviously, they've closed down some stores in certain areas like KLIA and in Genting, where they were shut down. There's no point for them to open, right? But they've sort of maintained their stance, and they're now targeting to open 5 to 10 stores a year. Padini CEO is a woman, Sharon, so yay, right? And yeah, potential industry consolidation, because they've been able to stand their ground, and their competitors have slowly been phasing out because of the pandemic. So the best comparison that we can come up with would be mom and pop kind of like shops that sell affordable clothes. So those have closed down a fair bit. So we like Padini for that fact. And a risk that we highlighted here is lack of expansion plan. So 5 to 10 is actually not bad, because previously they were targeting 3 to 5 store openings. So 5 to 10 is not bad. And moving forward, it should look good for them, especially upon enjoying the palpable return in shopper volumes as things reopen. People returning back to the office, they go shopping for clothes at Padini. People go out and celebrate Raya, they get clothes from Padini. So they've been able to really benefit from the demand normalization Yeah, and then we've also got My News and 7-Eleven and Aeon. My News, for a while, we liked them very much because of their venture into CU. If you don't know, CU's been popping up everywhere, right? And CU is this Korean convenience store brand that opened back in Malaysia. They opened in April of 2021 last year, right? And we still do like My News because of the prospects of CU, because I think a lot of people would compare CU to Family Mart, and I know a lot of people love Family Mart. Yeah, so generally, I think this applies to both My News and 7-Eleven. Better mobility within the past year should lead to better footfall and better sales and profit. For 7-Eleven, as you can probably tell, a lot of their stores are undergoing transformation. So instead of just like normal convenience stores, you're seeing a lot of 7-Eleven cafes. So that's part of their strategy, which we find to be quite interesting, because the thing about 7-Eleven in comparison to My News, 7-Eleven has like a very, very wide store network. So it's almost like it's very saturated. So where else can you then expand, right? Because you've got so many stores already. So that's their strategy, to convert convenience stores to cafes. And I think overall, when it comes to the local convenience store landscape, there's this wide movement to inculcate this dine-in culture, and this applies to a lot of these unlisted other convenience stores as well, like E-Mart. There's this option to dine in, which I think is worth exploring, and there's still so much room for growth still for convenience stores, because we still fall far behind compared to our peers in Japan and Korea, obviously. But then I think we're still behind also when it comes to like convenience store per capita in comparison to like Thailand, right? And Indonesia too, if I'm not mistaken. So yeah, lots of like growth there if only they are able to manage their risks well. It should be good. So risks would be like CU. CU, I think they disappointed a fair bit because of their CU brand, although it was very promising. Like when it first opened, I don't know if you saw the lines that formed up outside of their stores, particularly the first store that opened in Center Point in Bandar Utama. Yeah, it was really promising. So it was quite shocking to a lot of us analysts that they were bleeding for so long. Okay, not that shocking, like it was locked down, but yeah, they were bleeding so much. The gestation period for CU, I think, will be longer than expected. I think even Family Mart, to break even, it took them like a couple of years. So yeah, and then a plus point for MyNews in particular. A plus point for MyNews in particular is the fact that they've got their FPC, their food processing center, which is expected to turn around. So for MyNews, their FPC was loss-making a fair bit because it was underutilized. So with this expansion of CU, they should be able to utilize their food processing center, which I've visited before. It's in Kota Damansara. They should be able to utilize their FPC better to hit the 70% utilization rate to break even. So hopefully that, on top of like return in foot traffic, on top of their expansion plans, and also curation of a more favorable product mix, should drive their earnings performance moving forward. Yeah, and then for Aeon were not as positive in comparison to the rest, because Aeon, the thing about Aeon is that they've got two segments, right? They've got the property management segment and we've got the retailing segment. So both these segments are in highly competitive spaces. If you talk about property management, they're going against like other shopping malls that are great. If you visited Aeon malls, I've only ever visited, like outside of Klang Valley, I've only visited the one in Taiping. It's only like busy, super like promising because it's the only mall in town, right? So yeah, so Grace is asking what is the short form word FPC in the slide of mine. It's their food processing center. It's basically their company, their factory located in Kota Damansara, because what happened was they invested in this one business called Maru, or like, if you notice, like MyNews, they started selling fresh food items or ready to eat items, right? The sandwiches, the onigiri and all that. So those things need to be made somewhere, right? So those food items were prepared in this FPC, food processing center located in Kota Damansara. Yeah, so that center was underutilized for a long while. It was like operating at 50% utilization rate, loss making essentially, bearing all these costs to make food, but like not breaking even just yet. So there were concerns about that. But moving forward, it should turn around, because they just had, because the last time we visited that FPC, it was a couple months ago. They told us that they just had a couple, maybe 200 new workers coming in to replace some of their outsourced workers. So in terms of utilization rates, it should be on an upward trend. I think they're moving towards the 70% break-even target already. Yeah, I feel like I was saying something just now. But essentially, these are the names that I cover under the discretionary space. I hope that, hold on. These are consumer staple names, but this is more Wei Xiang space, so I don't dare to speak too much on it. And also, I think we're sort of running out of time anyway. But yeah, Carlsberg, Heineken, British American Tobacco, Power Root, Nestle, QL, and TPM, these belong under consumer staple. Oh, I didn't put Farm Fresh here, sorry, a bit outdated. But yeah, these are the names that we look at. So I think given all that I've touched on earlier on in my presentation, and also the points to look at when it comes to assessing like who will benefit in an inflationary environment and who will lose, the pricing power kind of mechanisms and all that, I think you can hopefully, by the end of this, you'll have a more informed view like of what to have cognizance of, right? Should you decide to invest in consumer stocks? I hope this was somewhat beneficial. If you have any questions, you can email me or my boss, Wei Xiang. Our contacts here. So thank you for your kind attention. Hope I didn't bore anyone. So I'll now pass the time back to Shaz.
All right, thank you so much, Ms. Raja, for your very well briefed presentations and very information. All right, next, let me share my slide back. All right, if you have any question, please write your question in the Q&A box. We still have another 6 minutes, so we can have a Q&A session with Ms. Raja. All right. So, Ms. Raja, I have a question for you. So, what is your investment advice for fresh graduate women? I mean, for example, for a youngster like me, still young, just fresh graduate. So, what is your investment advice for us?
I think, okay, if I could give one piece of advice to young people just starting out investing, I think now is the time for you to take risks. I think at this age, this is when you don't have obligations. You don't really have a lot to lose at this point in time, right? So this is when you should really try it out, investing, and see what you like, and sort of try and test what kind of like market feel you have, because I think when it comes to investing, it's more of an art, and like you really need to see how you can balance your fundamental knowledge and also your feel of the market. So all those things are quite exciting, and I think now is a good time for a lot of these new students that just graduated to try it out. And like I said earlier on in my presentation, I'm a firm believer of women having their own money, right? Not depending on your husband, your boyfriend, what I don't have. So yeah, I just implore women to try to invest.
All right, thank you so much. Since just now you are saying that for a fresh graduate we are obligated to take a risk for risk investment. So how about retiree?
Okay, the thing about retirees,
Yeah.
okay, so then the risk
Female
there would be
retiree.
female retirees would have much higher risk because you've retired, you don't have a job anymore, so you basically depend on like your pension. So
Correct.
you cannot actually risk making losses or like making negative returns on your portfolio. So then my advice, not that I'm in a position to be advising like retirees in particular, but I would say see what your investment appetite is like, and act accordingly I think retirees don't have the privilege to be as reckless as like fresh grads and like young people starting out.
All right, so since we already touched about retiree and also fresh grad, so how about mid-career women? Mid-career women, so yeah.
Mid-career woman,
Especially
I
for
suppose,
professional working women so out there, right? So what is your investment advice for them?
I would say be very smart about it. Like really, I think you, especially if you don't have kids, I think you have the time to really read up on the things that you want to read up on. So be very smart about it. Like don't just see news headlines and then think, okay, because there's going to be a project somewhere, so this construction company is going to do well, right? So then you would just recklessly put your money in there. I think now you have the resources to really read up more like analyst reports and like more in-depth industry specific kind of journals and write-ups. So my advice then would be just be very smart about like where you get your information from.
All right. There's one question from Facebook. So can you tell us more on NTPM?
Okay, unfortunately, when it comes to our universe, I don't cover NTPM, so I cannot actually speak on it. If you have any questions on NTPM, I think you should be able to reach out to my my colleague, Sung Wei Xiang, for more comments on that. Yeah.
All right, last question for you about women. What is your investment advice in your own opinion for for housewife? Since we have like a lot of housewife here, so we would like to
Okay.
know your opinion. your investment advice
Investment advice to
for them?
housewives in
Yeah.
particular.
Since housewives sometimes they got a lot of capital from the husband, for example,
Yeah.
or yes, maybe they do a side income, could be.
Yeah.
So what's your investment advice to make sure that they can grow their capital income?
I mean, I don't think I have anything substantial to add on to whatever that I said just now. I don't think there's anything that sets you apart from women who have a career, whatever. Housewives, I think, do just as much work, if not more, than women with careers. So I applaud all housewives out there. But so then I suppose my advice would just be the same. Just be very smart about like the resources that you look at when it comes to investing. Please don't trust anybody too easily. Please depend on publicly available documents. Don't try to
listen to rumors.
Don't try to listen to rumors. And yeah, I suppose that's it.
All right, thank you so much, Miss Raja, for spending time with us today, and then discussing about investment. And we already reached the end of time. So before we ended this webinar, I would like to share again with you guys about the contest, how you can win 800 ringgit. So the contest name is Be a #superstar video contest. So what you need to do is that you need to create 1-minute video. The title is What Inspired You to Invest. So, and then after you already record your video, and then what you need to do is that you need to upload your video on YouTube and then send us the YouTube link to Bursa Malaysia, engage at bursamarketplace.com before the deadline is 6 January 2023. And then your video will be published on Bursa Marketplace website. The top 5 video with the most like will each receive 800 ringgit. So if you would like to know more about this contest, you can visit the Bursa Marketplace website for more details. I already sent a link to Bursa Marketplace website. So if you like to know more about this contest, you can click the link. All right. And then next, I would like to say thank you again to Ms. Raja for joining us today and share with us a lot of things and with the valuable information. So I would like to say thank you to all our participants today for spending time with us. So all right, everyone, have a good day. Thank you. Thank you, Ms. Raja. Hope to see you again in the future.